Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and this is a live webinar where we take a look at the Forex market and some other financial instruments, of course, perhaps commodities and stock indices. Before we take a look at the live market, though, be aware that this is shown to a global audience, but may not be for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more information about that. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with its disclaimer and you are aware of the risk involved when trading. Alrighty, before we kick off the webinar, please be aware of the following special campaign period of a special 2 months time period where you can capitalize on a deposit bonus if you're a new trader or an existing trader with Admiral Markets. There's up to 50% potential there if you make a deposit for your first deposit, basically, in April or in May. So if you're interested in the details, and I think most of you are, logically speaking, it's a great opportunity to top up or capitalize on extra liquidity or maybe better said margin, and of course the ability to perhaps even unlock that bonus in the future. And if you're not a current trader with Admiral Markets, then it could be a good time to make that step. So take a look at admiralmarkets.com and you'll get more information about that on the website. Alrighty, let's move over to take a look, first of all, what's going on here in the news and the heat map. And then we'll take a look at the live market charts. Of course, as always, hope that you had a good weekend, by the way. Let me see if there are any questions in the meantime. Let's see where the questions box. There we are. Good. So, movers today. Well, we got some stocks here on the upside. AUD yen is among it. Let's take a look. Silver as well yesterday. Let's take a look at the currency pairs. What do we have here? Currency pairs, pound yen, a lot of volatility. Not maybe a massive directional move on pound AUD, for instance, as you can see, kind of neutral. Let's see. It's a bit slow at the moment, but we have pound dollar, I think here, pound Swissy, New Zealand Swissy. So I don't think there was a big movement, but that's Monday, so that doesn't surprise us, of course. Let's take a look at the currency ranges. Dollar again on the bottom, pound again number one, classical situation or classical setup for volatility point of view. All right, so this week we got inflation rate on the pound today as a red tagged event. What else do we have? I think we had, if I remember correctly, we have some interest rates. Let me double check that. But today, primarily the pound news in about an hour or so, 1.5 hours, right? That is the main focus or the event that's dominating the most today's this morning's session. Edith had a great weekend. Sun was shining in Holland, so that's great. It's perfect always when the sun is shining after a long winter, right? We need to kind of regenerate, recoup some of that energy, and sunshine is actually one of the best ways to do that. Absolutely. I'm also enjoying the sun throughout the weekend, and even yesterday as well. It was very sunny actually, but I'm not in Prague at the moment. I actually doing a couple of weeks traveling, so in Italy, so that's nice, and I'll be back end of April in Prague. But it's good to prolong the spring just a tad, or let it start a bit earlier than usual for myself, because even though it's not very cold, it's not great weather in Prague either. So it's good to extend the summer a bit. Regarding our news events, yeah, we do have, by the way, tomorrow, Bank of Canada statement and rate hike or rate decision, excuse me. And Thursday, indeed, the pound. So we got 2 rate decisions. I don't expect any changes, but that's to be aware of. Yeah, Nathan said the same. Great. So let's take a look at some of these currency pairs. First of all, unemployment on the Aussie, by the way, Nathan is adding. All right, so let's start with the euro dollar. I think we can be pretty brief with that because the euro dollar basically is in a very tight range. If you look at the 4-hour chart, we got very strong resistance at 114.75, 115. We have a resistance trend line coming in as well there around that area. And we have a very strong support level that basically has been consistently used throughout last week. And price really finding a lot of buyers apparently at that zone around 113, 113.50. That was about what we were saying last week, Monday, right? That a retracement is probably a good moment for a dip for further upside, and indeed the 38.2 fib at 113.25 being a bouncing spot. So that worked out pretty neatly. Now the upside has been rather slow though. So yes, it was a bouncing spot. It turned out to be indeed a level that the market respected and used. But so far the continuation upwards has been very slow, and that's because of course due to that strong resistance zone that we're seeing on that chart. So not bad to have a buy at that zone right here when price is at 114.18 with a lot of wicks right here is not interesting for my opinion, not interesting for me to trade. And I'll not be really focusing on this pair today. Now it might make that dash to the upside finally, but I consider that more of a trade that should have been entered lower, and if someone's in that trade, great, then you can hold on to that. I don't think it's a good moment to add or look for a first position. If anyone bought here, right, in that green zone, great. Like we were discussing last week. If not, I think it's just a pair you want to stay out, or at least that's what I'll be doing. Yes, we do have a pretty good uptrend here on the daily chart, but with these resistances that nearby, if anything, it could be actually worth waiting for a bearish bounce in the 115 resistance area. So if anything, I think that could be a bit of a reversal trade setup idea at that resistance rather than looking to trade up to it. Now, if it does, as I said yesterday, if it does make a dash up, then start to make a bull flag and then breaks that bull flag, then it could be a bit different. Then there could be space to 117 that opens up the playing field, in my opinion. And then there's a decent zone between 115 and 117. That would be worth trading. Trying to fit and figure out a trade in this very tight zone, I really don't think is worth it. All right, but we already see some intraday, slowly but surely, some intraday upside. A few minutes from now, we will have pivot points. But in the meantime, I'm going to take a look at some other pairs because this is not my primary focus. All right, pound USD looks a lot better. Actually, I think is looking good for some upside, despite the fact that I have a bearish fib on the chart. Yesterday, I said that the 61.8 or 50 fib could be good bouncing spots if the triangle breaks. The triangle could be a breakout trade to the upside. That worked out fine. That breakout trade indeed taking price up for some 100 to 150 pips. Anyone taking that breakout did a great job with the pound USD yesterday. Anyone looking for reversal trades, hopefully waited for the 61.8. And if you look from a time perspective, you had all the reason to wait for that because here it was still very early in the day. Reversal trades are better when London session is over. That was around here. So when you see a wicks like that, near the end of the day, at a 61.8 fib, that could be worth a reversal trade, right? Now, I didn't take that. Why? Because the momentum to the upside was actually stronger than I expected. And I knew that the Asian session would give most likely some type of correction. Also, from a wave perspective, this morning, to me, it seems like a classical 1, 2, 3. This is a wave 4 up for wave 5. So yesterday, I think, was more of a wave 3 than a C. That was my judgment at the time. That's why I don't think it was good to take that reversal trade at the 61.8. Anyone who did can easily move it to break even and probably be out by now or soon, right? And nothing is lost either. But I don't think that yesterday was a good moment, and if it was taken, then nothing should be lost. A better reversal moment, I think, considering the current impulse and correction structure, impulse, correction, I do think a better reversal trade would be from this fib, the 78.6 fib. In that case, we could have completed an ABC, a zigzag within the C part. We probably, in that case, completed a 5-wave as well, with this being 4, as I just showed. So from that point of view, I think that basically we see a good chance of price making another dash up to 143.60. All right, does everyone hear me properly at the moment? Just checking. All right. Okay, cool. So let me just quickly write, bear with me 10 seconds here, as I write to MC. Alrighty, folks. Now, how to catch that trade? I think still probably better to wait for London Open. Then I'll see the new pivot points. And I think that is a better approach, but we have to be a bit lucky here because the momentum has already started and the breakout has already occurred. So this trade has already, in a way, partly left its station. Doesn't mean that today it's out of question for longs. I'm just saying that now would probably not be the right moment with 2 minutes to go within the hour and pivot points, new pivot points available very soon. That I don't think is a good thing, especially if price has already kind of moved away. So what we'll probably see is two scenarios. We could see, most likely, we can see an early dip within London still. We got a news event as well. And then after the news event, if it makes a dip like this, I think it could be ready for a continuation rally. Or, for instance, the news event even accelerates the momentum. And then I would have to look for a pullback and a continuation in the New York session. So obviously I'm looking for a pullback, and I'm looking for that to happen after the pound news event. And then it depends if I get the pullback right after the news event or in New York session if I'm looking for continuation. What kind of pullback, you might be wondering, for those that join the webinar often, you know that I would like the AO to go back to the zero line. I would like to see a nice little bump here to the upside, indicating momentum. I'd like to see this retrace a bit back to the zero line, to the middle line. And that would be the clue that retracement has been completed, probably to a 50 fib. And a bounce trade is possible, either by just taking the fib or waiting for a fractal break, for instance. Those are just two options. So I think pound USD is in an okay formation here for upside. We have an uptrend on the hourly. You can see the moving averages are aligned. All right, so yes, we had a pretty strong downside, but that's over. 21 EMA, short-term EMA, clearly above the long-term. So I think that is definitely an okay trade. Now, 4-hour chart, you may say, hey, Chris, what about the 4-hour chart? This is definitely in a bit of a downtrend channel, and I would agree with that. And I would say, therefore, if it gets back to the top of that channel, it could be a very interesting zone for a reversal trade because there is indeed a slant to the downside. So from that point of view, it could be very interesting for looking for reversals. Price also broke this dotted green line, which is kind of a neckline if you consider this to be at head and shoulders, which I do. And then this is the neckline. So we broke that neckline, and that's why I do think that this is still potential for a pullback for more downside like this. And I would not be surprised if you look at the pound USD, how many ups and downs it's made, right? Up, down, up, down, up, down, up, down. Well, kind of fits in that pattern, right? So wouldn't be that surprising. So from that point of view, I do think that if today we see, let's say, end of London session, we see we see a rise a bit, then the dip, and then the continuation, right, like this, and somewhere tomorrow or at the end of today or something like that, we see a bit of exhaustion here. Well, it could slowly start to do this, perhaps, right? So I think that up and down is still, as talked about yesterday in the video, still very likely. Alrighty. So let's talk about some interesting pairs. I think when I pre-scanned the markets, I don't know, 2 hours ago, analyzing, I think that Aussie, Kiwi, Aussie USD, New Zealand USD, Euro odd, Pound odd, Euro New Zealand, Pound New Zealand are all interesting. So we're basically looking, I think, at Aussie and Kiwi strength relatively at this moment. That's the trend, at least. Now, will it continue? We'll analyze that in a second. But I think we're looking at Aussie and Kiwi strength as a trend and as an impulse. And we're looking at the majors as a bit of a weakness. We see dollar, euro, and pound being a bit weak against those. All right. So that's one thing. Now, the pound USD still favors upside at this moment, but then after that could be down again. So your dollar is a mess. Not even that interested in that, as you know. Now, besides those euro, pound, dollar versus Aussie, Kiwi crosses, I think that from a trending perspective, pound CAD and euro CAD downside too. Perhaps New Zealand Swissy upside and pound Swissy upside. Probably AUD Swissy, I guess. I'm not sure if I checked that one. Would make sense in that case. And dollar CAD downside. Right? Those seem to be the pairs that are trending the most at this point. So when we looked at the euro and pound, only pound was part of that. Let's take a look at first dollar yen, and then we'll take a look at those trending pairs. Dollar yen, and definitely take a look. I see two comments. I see Iron asking about euro pound. We will take a look at that, but let me maybe first take a look at the dollar yen and Aussie, and then we can do that. If I forget, please remind me. Okay, thanks. Let's see. Yeah, the Swiss C is correlated. Good point, Nathan. That's definitely true. I probably didn't look at the Swiss C, but I would have a hunch it's probably moving similar to New Zealand Swiss C as well. Let's see. Beverly says, like my list. Let's see. She's in a New Zealand dollar short, pound New Zealand, and then still the pound odd and pound Swiss C shorts. Cool, cool, great stuff. Still in that pound odd. Amazing, Beverly. It, yeah, New Zealand dollar long. That I thought so indeed. Yeah, but the short pound New Zealand. Sorry. Yeah, cool. Let's take a look at those pairs. Pound. Sorry, this is dollar yen. Excuse me. And this is an interesting one, not because it's trending at this moment. And the reason, well, okay, let me rephrase that. It is trending, right? If you look at the 4-hour chart, obviously, yes, very strong momentum. Don't get me wrong. But we are seeing at this moment a bit of a consolidation here. So that's why I didn't put it in the trending category, because at this point, I think the consolidation is pretty sizable on a 4-hour chart. And I would say now we got into a neutral territory, especially also because if you look at the hourly chart, we broke out of this resistance trend line. We had a clear double, well, not a clear double bottom, but we had a bit of a pause and hesitation, at least, right, at the previous bottom. And you can see that we were not able to break that. All right. So yes, that ascending wedge didn't break to the downside. The resistance trend line actually got broken and slowly kind of trying to push to the upside. Now that upside is not very, very enthusiastic, right? It's a bit meager. But all in all, I don't think it's a very strong downtrend. It's certainly not a momentum at the moment. It could be still a downtrend. It's not a strong bearish momentum. it is ranging and it's going sideways. Okay, and breaking out of that bearish pattern, in fact. So from that point of view, a bit of a hesitation here. Now, unquestionably, though, the 4-hour chart definitely in a downtrend, and therefore, if it hooks back to any of these fibs, I'm very interested. As indicated in the video as well yesterday, we had a strong breakout candle. And you might be asking, what breakout? That's still the same breakout as we discussed last week. This triple bottom was already broken last week with clear daily candles. Let me show you. Right, this is the breakout candle we discussed live on Tuesday and a trade on Wednesday, and that worked out fine, and it fell, almost 300 pips apparently. So that's fine. But although the breakout already happened a while ago on the daily, actually the weekly, of course, just happened yesterday, right? Or Friday when the breakout candle finally closed. So when we look at the weekly breakout candle, we got a close near the low, strong candle, sizable candle. So that looks like a good breakout. So if we get a pullback of that candle to about halfway, for instance, or the 38.2 fib at 109.25, 109.75, perfect retracements, I think. Stop loss above last week's high, I think could be a great, good trade when just trading the candles of the weekly. I think that, or that could be at least kind of a extra confluence point. So that's the weekly candle, just looking at that. The break, first of all, and how it broke, second of all. Now on the daily, we see, I would say, at least one indecision candle here, but this is a bit of a weaker candle too, perhaps. And we have the fib now. This is the fib on the weekly candle. Once again, let's go to the 4-hour chart, and you can see many of these patterns we talked about already, the triangle, the channel break, the flag break here. And now we're seeing, I think, the start of another potential pattern, which is a potential, roughly speaking, potential bear flag. All right. The double bottom is not typically for a bear flag, but let's see, could be similar to it, right? So are we going to build that or not? That's the question. Well, for the moment, if it breaks this bottom, then probably not. In that case, I think there could be a breakout trade to 106.50 on lower time frames, like 5-minute charts. Probably I would be trading that. Now, why would I be trading such a low time frame, or 15 for that matter? It's about 110 pips there. So I don't think that is a swing zone area. The space, I think, is on the tight side for swing trade. Maybe if an hourly candle is traded somehow, for instance, let me give an example. For instance, if we see, let me zoom in a bit as well. So if we see, for instance, here a candle like that, and then another candle like that, and then another candle like that, and I don't know, we see some smaller candles like this, for instance, and then we see another candle like that, maybe, that could be still a short with probably a stop loss, could be enough above here, or definitely above here, and targeting 106.50. But that, in a way, when using candles like that, could be just a similar setup on a 5 or 15-minute chart. All right, so that would be a breakout scenario. Tight space, so I don't think there's really much of a swing trade there. 106.50, by the way, is another important level, not only because it's a -272 target, but also if we start putting a fib on the monthly chart, by the way, and draw it all the way from the bottom all the way to the top, so that entire uptrend, basically. I mean, we're talking about years and years of uptrend, right? And that 38.2 fib is right at 106.60. So obviously that's a monthly fib, so it's massive, right? So could it go through that fib number by 50 pips? Certainly. Would we even notice that it breached the 38.2 fib by 50 pips? Probably not. Not in this chart. That would be like, if you consider the distance between the 38 and 50, and the fact that the distance is 600 pips. So 60 pips, which is only a tenth of that area, is 10%. We're not going to notice 30 pips at all. So it's a strong zone, but definitely a very, very general area, right? So we got to be careful though. Point is that we got to be careful when price gets to that area, the 38.2 fib here. That is intraday shorting breakout potential. Now, what if price uses the bottom, the support here, the green zone, for a bit of a bigger rally? Then I'm keeping an eye on reversals at the 38 and 50 fib, right? And perhaps the 61.8. We see 61.8. This is kind of like a mini supply and demand zone on the left. I don't think it will break that area, so I think that really the max will be 110.20. There's even a zone above it, which is a red zone, right? That is connected to these bottoms, basically, here. But I don't think that price will retrace that deeply. All right, but anyhow, basically any of these four levels could be a reversal spot. So I'll be keeping an eye on price. I'll be seeing how impulsively this moves up, and therefore which of these fibs might seem the most likely when price gets there. In any case, if a stop loss is placed above the 78.6 fib, then it shouldn't matter which one is used. Obviously, there's a risk in both, right? If I'm satisfied with the 38.2 fib, my risk is bigger. But, the advantage is that I have a trade almost a bit more certain than if I wait for a deeper fib. If I wait for a 61.8 fib, there's a good chance I might miss the trade, but I have a tighter stop loss. So in these cases, sometimes I even split the trade in two parts, and I put maybe a position on at the 50, and I still keep part of that risk that I allow myself for that trade to be placed somewhere else. It's quite a wide range. So that could be one approach. But I would not actually count too much on the 78.6 fib. I think one of these three fibs is the most likely. All right, so let's see. Yeah, Beverly is adding that resistance zone will probably be respected, at least initially. And if I'm wrong and the trend does not continue, then we should see something like this occur. Probably, at least. And if there is indeed multiple bull flags or bullish looking triangles, then there's definitely something to be cautious of. And there could be always some trade management options to get out of that trade. All right, Ozzy talked about the bounce at the 38 or 50 fib yesterday, slashed the breakout to the upside, and it is breaking actually as we speak, or actually maybe even happened in a way, because look at this 4-hour candle, strong candle above it, and I think there was some good opportunities yesterday to trade that break. We had a bit of a consolidation zone, we had momentum prior to it, so there was some Aussie trades to the upside, and we see a bit of a flag and a continuation already. So from that point of view, I think that I was about to say that a retracement of this candle is nothing wrong with trading that breakout like that. I think it's a strong breakout candle. I think that it's a decent size. It's a close near the high. Nothing wrong with that particular candle. We already broke above this particular candle high, which is good to get rid of that resistance in a way. All right, so along anywhere around that fib could have been interesting, like this. The 50 fib, as you can see, 76.13. Now, as we speak now, price is actually already moving up. So let's take a look at a lower time frame here, the 1-hour chart. Maybe even quick look at the 15. So probably for me at this moment, I would like to see a dip back probably to the 21 EMA. I don't think that it has to continue like this forever. There will be probably a moment that it dips back to the 21 EMA. So I think at this moment, if the 50 fib was missed, then or any of these candles right after that, I think another dip to the 21 EMA should be okay. I think that there's a decent space still to the upside, so this could show rallies and dips like this, and trading that to the upside. I think trading the Aussie to the upside today might make good sense. We got still good space to the top here at 77.20. So let me take a look at the pivot points now. Aussie, let's take a look. R2 at 77.17. I'm 5 at 77.50, then 77.90. So considering the breakout, considering the momentum, and considering the uptrend that we have on the daily chart too, as you can see, look at that. I think that any dip on lower time frames is good for looking for continuation, really. Right? That's my 2 cents on the Aussie. Not I think worth it now. I'd rather wait for a bit of a discount. Discount in the sense of 21 EMA. Alrighty. So I think that the Kiwi probably is looking the same. Oh, hang on, folks. Let me restart that. Actually, I would expect when looking early this morning, all of these, as I said, all of these pairs are actually looking quite similar. The Euro New Zealand pound odd. So let me take a look which one could be the more interesting one. We just looked at the Aussie, but let me take a look at Euro pound to see which of those pairs, the Euro pound, is maybe the most interesting versus Aussie and New Zealand. And then I can take a look at odd New Zealand as well, see which one of those is more interesting, right? In the meantime, let me see any questions here. Is it too late to get in the Aussie now? Well, as we were talking, it was kind of had already a substantial run for a 5-minute chart at least, about 40 pips. At that moment, I don't think it was worth it. Not in my point of view. I would rather see a pullback indeed. But if someone's trading, I don't know, the 4-hour chart perhaps, it could still be okay. All right, because it's still at the same area as the candle breakout, right? So from that point of view, maybe not bad. Sorry, folks, this is the wrong profile here. I have to go back to my other profile so I can see the normal charts. These are not manually, automatically colored candles. So the blue candles are not bullish. They're bullish candles, but they're not necessarily. It's a system setup basically. It's not candlesticks. This is the harp system basically. But that's not what I want to show you. I don't know why it seems not to be reacting, but anyhow, now you can take a look at how harp looks like then in that case, unintentionally. No problem. You can see the gray candles are basically indecision zones. Blue candles are bullish, red candles are bearish. There's a 21 EMA band on it. You see arrows, those are basically, there it is finally. Arrows are basically momentum, so if it's an uptrend, blue candles or blue arrows and blue candles are potential entries, right? Whereas the red candles, well, that could be an exit, maybe, perhaps, but it signals loss of momentum. So blue, momentum and trend aligned, let's say. But we use also a 1 hour time frame besides looking at the 5-minute chart. So now we change the profile now. We align kind of like the hourly trend with the 5 minute trading with the hourly trend, basically. Nathan is saying that the market is still in the waiting mode. I guess it's not uncommon at the moment indeed. Kind of pound news, so you have these ups and downs, and when it starts to move more, and then it slows, and then it moves more indeed. Beverly says New Zealand dollar went long yesterday from 68.31. Okay, great. Sorry about this delay, but yeah, I think that these odds in New Zealand could be interesting. But let me take a look a bit better which specific one could be the best. There we go. By the way, if you're interested in opening an account with Admiral Markets, of course, within this bonus campaign period, feel free to send Nennet or myself an email. We can help you extra with that, answer any of your questions that you might have. And if you do that also via contacting us, there's an extra benefit because we like to help out traders. So we provide some extra info about trends and stuff like that that might be useful. So, mini courses like that. So that could be interesting for you. If you find that interesting, of course, feel free to send us an email. Alrighty, so let's take a look at, here we go. This is the Kiwi. Kind of similar, isn't it? Also already had a breakout, clear breakout of this trend line. Strong candle after that. And this could be also pretty good, buys on dips for further rallies, I think. We'll take a look at the pivot point here. 68.31. That's where Beverly entered with the stop loss at 67.37. Is that a daily trade? Daily chart trade? Beverly, or is it 4 hour? This part is very choppy, but ultimately it is showing a bit of a bullish angle, obviously. Daily, yeah, I had a hunch it was somehow. 67. That makes sense. And I think you can use those daily candles indeed for trail stopping it. That's great. Anyone waiting for the break of this trend line instead of taking maybe what could have been the break of this fractal, that could have been one entry, I think, what basically Beverly did. Or if you waited for this candle, that could have been another entry right there. And that could still be a pending order there, but I think it might not get hit, but it could still be possible to have a pending right there. Another way could be just to put a fib from, let's see, probably from here to here still. We didn't hit the target, so I think this fib is still alive and is still valid, and 38.2 fib stop loss here still could be okay. Trend line support there, got some tops here as well, so I think that could still be an okay setup. 68, 50-ish, stop loss 67, 70-ish, targeting here. Not bad, I think. That could be an hourly setup. The other one could be just to wait for even lower time frames. And let's see. I would probably need to. This rally is not as actually as strong as the Aussie. This had a bigger, deeper retracement. So probably would like to see a bit of a triangle here. Price maybe bounce off support again, or to breakout. This pullback to the 21 EMA I don't think is good. Not on the Kiwi. Because price didn't really move away from the 21 EMA all too high. That's the difference. Actually it's valid here too. Okay. It moved away from it a bit, but not a lot. So if it gets back around here, I think that could be a good bouncing spot. I want to make this green so it seems a bit more natural. All right, there we go. All right, but the same story, basically dips for good for upside. So anyhow, let me continue. Pound AUD. All right, I talked about the upside trade, and indeed, price did make a pretty good rally off of the deeper fibs, right? As talked about last week, and went up for, well, let's take a look. Good rally, right? But now it's showing weakness because price is breaking through this support trend line. And it really didn't break above any of these tops. So that bigger zigzag up to this target does not seem likely anymore. So from that point of view, I think that we could be in a breakout actually to the downside. This is still in the channel, although there's a lot of divergence. As long as it doesn't, as long as it keeps breaking support levels like that, and it already made a three-wave correction. This is 1, this is 2, this is 3, and broke support. I think that this could be ready for another breakout territory. So, price can correct in two ways. It can correct through an impulsive ABC zigzag, but it can also correct via triangles and chart patterns like that, and flags and sideways moves. So if a correction has lasted already for quite a while, like a 1, 2, 3 here, then breaks support, I think we are in a territory that pound AUD is ready for follow through. Now, I wouldn't expect a big massive downside, because the angle of this downtrend channel is certainly weak at the moment, right? But there could be some space, especially for a small swing trade on the hourly. I think that that's still fine. All right, so from that point of view, interesting. Yeah, that would be good for Beverly. Obviously, we got to be careful about how price reacts to basically this bottom of the channel. It could still be another bouncing spot. But yeah, it would definitely be good for Free Beverly. It would be great extra pips again. Let's hope so. Let's see. Euro AUD is looking bearish to me too. And not that much as pound AUD though, but we did break. Here you can see a very, very slow break. It's like a channel, and we had a turn already. We're about halfway that channel, so it's looking a bit less bearish maybe. But obviously here we had a bit of a head and shoulders as well, at resistance trend line. And we broke this mini neck flag as well. Not that neck line. I know I'm mixing up these terms. That sounds funny. I think I will make a new pattern called the neck flag. What do you think? And we broke the neckline, kind of pulled back, continued. So there could be a follow through of that. Maybe not the best position though at the moment, because we're halfway. All right, quick look at Euro New Zealand. Failure really to break above this resistance line, as we said last week. It's challenging that, and it really was a tough time. Bull flag tried to make that attempt and is failing. So, however we draw the trend lines here, it's breaking, right? So there's some space back to the bottom of this support line. But here too, about halfway, oh, that's still from last week. If you want to write an email, then here you go. That's it. This is, I would say it is pretty choppy, but if we dive into it a bit deeper, you do see a momentum, and we do see a bit of a correction, and that correction is about to be broken, or is close to being broken. It actually has a candle below it, but the candle breakout is maybe a bit weak. It's okay-ish. All right, so let me take a look at the euro pound now. And then we'll see which one of these combinations looks best. I think, to be honest, I think the Aussie and Kiwi from what we've seen so far, but I would like to take a look at the euro pound and AUD New Zealand, and then we'll make a final kind of conclusion, okay? So in the meantime, though, Aaron was actually the one who asked me about euro pound. Aaron is long. Okay, he's asking what I think. So let's take a look. Well, so far, definitely strong bullish momentum. Yes, last week was still a bullish candle, a bit of wick, but not anything major. Monthly candles bullish. So far, all the reason to be bullish. Daily candle, one bearish candle indeed, but down the uptrend is not in danger because of that, I would say. It could mean that there's a retracement potential though. No divergence on the 4-hour chart, which leans itself for more upside as well. And if we put a fib from here to here, price is actually at the 38.2 fib. All right, that looks good. I don't trade the euro pound myself, but I can see why Aaron liked this potential. We had an ABC zigzag, or it definitely looks like that. Went down to the minus 61.8 target. So I like the idea. Now at this moment, there seems to be a bit of a flat, which of course could lead itself to this, but there is always that risk. And I think that considering all of the information we just went through, the chance of a bounce at the psychological '08 level as well, I think seems a lot better, indeed. So if there's a slightly better chance, definitely slightly, maybe even a good better chance, that euro will be stronger than pound, that means that pound odd, pound New Zealand look better for weakness than euro odd, euro New Zealand. That's one conclusion. Now let's take a look at New Zealand. Breakout to the upside, also at the 38.2 fib, and I would say could easily be a bouncing spot. It looks like a falling wedge actually, or it could be actually a descending wedge too. If it breaks the support, then the Aussie weakness is there. Otherwise, it looks more like Aussie strength at the moment to me, which would mean that pound odd actually and I think Beverly will be happy to hear that, uh, looks the best because we've got a bit more pound weakness than euro. We got a bit more Aussie strength, I would say, at this moment at least. And that could change than New Zealand. So I would say the odd USD, especially if this trend line breaks, if this resistance trend line breaks, odd USD looks a bit better. If the support breaks, New Zealand dollar looks a bit better. All right, so that's my conclusion for today. So all in all, kind of to wrap things up here and summarize my 2 cents on the Forex market, I think that dollar yen looks very interesting for downside. Pound dollar looks interesting for upside, then downside. Not interested in the euro. Aussie and pound odd probably look the best, but maybe Kiwi as well, depending on how the AUD New Zealand behaves. Yeah, that's it basically. And how about the pound yen and euro yen? You might be wondering because we didn't talk about those. I didn't talk about those because those seem to be ranging at the moment, although there is a downtrend. So what could happen is that it could be interesting, but I would need price to at least get back below the 21 EMA on the hourly chart. So at this moment, we're in a correction. Let's see, pound New Zealand short from 207.49. So yeah, that's my summary. Does anyone have any specific currency pair or time frame you still like to look at? Even if it's one we looked at, that's fine. But let me know the angle you want to look at. There are a lot of things we can look at: candlestick patterns, chart patterns, moving averages, fibs. I could probably show charts to you for the next 12 hours. So we'll be running out of time eventually. So just let me know if there's anything specific you would like to take a look at, or any other currency pair or instrument for that matter. I think someone mentioned stock index. Oh yeah, stock indices. Beverly indeed. MC oil. So let's see. Could take a look at S&P, thinking it might have reached resistance and potential reversal. Beverly is wondering. So let's take a look at that. First pound New Zealand quickly. 207.49. Looks good to me. Got a good break. This looks like a hook back. And that's why one of the reasons why I think that pound New Zealand could still be okay too, just like the pound odd. I mean, we are hooking back to resistance. And this does look like a bearish pattern to me. And a break of that bearish pattern, well, I think could be reason for continuation. There is potential support here too, but that's still a while away from here. And it's a decent, okay-ish bearish candle. It's not great, but it's okay. So I think that makes sense to me. Regarding the stop loss, I think that there are a couple of options. Depends how a trader does it. If daily, probably up in here. 4 hour, maybe above this candle or above this candle. Pound yen. Yeah, the fibs. I mean, from a fib point of view, the 38.2 fib and the 50 fib, yeah, they could be interesting. I think so. I think that those could be pretty strong resistance levels. Had a good break of this triangle and a good follow through. And I think that there's a good chance of that continuation. I mean, we basically on the daily chart, this could be still a break, pullback, continue. At least for the couple, at least this week, I would still consider that very likely. Now, if it doesn't happen this week, and this week it fails. Let's say it moves up, it hits resistance, and it kind of fails to break the bottom, and then beginning next week it's around here. I would be a bit more hesitant, and then it could be maybe some kind of bigger correction occurring, and there could be a bigger bounce. For a moment, though, it certainly looks bearish. It's just that now we're making that a correction. But the 38.2 fib could be very easily, the turning spot, or the 50 perhaps. And I would consider that again in bearish territory is as soon as we get below this bottom, I would say. Show a bit of a bear flank on lower time frame, and I would be already interested in shorting it. The reason why I didn't put much focus on it right away was just because it's correcting at the moment. All right, let's take a look at some of these indices. If you're more a Forex trader, just bear with me. It's always good to look at some other pairs as well occasionally. And well, Beverly is right. This is getting into a very, very substantial top and resistance zone. It's going to be extremely interesting to see how price is going to react to that zone. There are a lot of candle highs, a lot of tops here around that zone of 2050 or maybe 2080 and 2130. And we actually saw last week reacting to that with a bearish candle. Now, we didn't break 2 weeks low, the low of 2 weeks ago. But I would say if we break through these little bottoms right here, these weekly lows, then there could be maybe a chance of one more follow through a bit to retest these bottoms. Now, if it doesn't break through those bottoms, then I would still expect a lot of resistance here. I don't think that is a zone that's going to be easily broken. So from a trading point of view, I don't see much to trade except maybe a break to the downside. I don't know. I don't trade it, so that's just my 2 cents. Gold still making the rally here. Took a long time for it to turn, but it is breaking above this resistance and breaking kind of the triangle to the upside. Now it's still at resistance, so I think any trades somewhere maybe here could have been good. Now I'm not too sure. All right, quick look at the dollar index. We can see we're getting close to support, the 50 or this bottom. So there could be a bounce soon, but maybe not just right now because there is still a bit of space. And the last one, oil, if I can find it, here it is. Talked about the momentum already here, and there's no divergence. So indeed, we're getting a bit of a bounce at the fib. Actually, if we connect the fib to here, we had a 38.2 fib, roughly speaking, kind of in the middle there, 38.50. And it does look like we could get a move up to the minus 272 target. Yep. So I think if it breaks 42.50, there's some intra-week, intra-day zone up to 46.30. That's just my analysis. It's not something I trade myself, but so I guess the most interesting would be a small break, pull back to the 21 EMA, and that could be a bounce. up to that target. Alrighty. So those were some of the other instruments there. Target on oil of 46.30, I think, for the moment. That's the minus 272 target, I would say. It's a conservative target. Might go further than that. Who knows? Minus 61.8 target, perhaps 50-ish. Maybe. I wouldn't count on it though, but you never know. Could be a secondary target. And definitely had some good moves indeed. Good falling specifically. Let's take a quick look. Here you can see big consolidation zone on the weekly. Let's take a look at that. And I actually had a friend of mine who wanted to buy oil. Somewhere here, he thought it would go to, I don't know, 200 or something like that. And I was telling him that I would definitely, I expect a bearish dip at that time. I was seeing this type of triangle and this momentum prior to it. And I was still thinking that a bit of a dip down to 60 would seem more likely to retest the support and then maybe a bounce, right? But I certainly didn't think that 100 was a good level, and I was trying to warn him that I think that he should wait. Well, luckily he did, because obviously that would have been a horrific moment or at least a bad moment to do that. And it was not going to 200, but it was actually going to 20, ironically enough. Now, I never reached 20. Well, it went into 20s actually. It went into 27. Now, the downside, even I had like 60 in mind as a target, but I didn't expect it could go that low. Eventually, of course, when momentum started to build up like this, then secretly in the back of your mind, you're like, wow, this is really a lot of pace. And then, of course, when we know that it has that kind of pace, there's a good chance of follow through to get at least some divergence, which we already have now. And from that point of view, because of the divergence, we might see, 46.30 might be seen is a conservative target, but from a divergence point of view, actually, it could really rally up to retest the stop here at 60 and the long-term moving average. That would be my way of looking at least currency pair charts. So if you use the same techniques on oil, that could be a target, but that could happen in longer patterns, right? This could be a 5-wave pattern that ends at 46.35. That could be an A of an ABC zigzag, for instance, or even a 1, who knows? There could be another ABC correction here for B, bring it back to 33 something. We would have to put the fib up to the top here, right? Move the fib. And there could be another C part rally like this in 5 waves, probably. That brings it roughly to indeed 60, right? So that's something that I think definitely could unfold here on the oil. That would probably be was logical at the moment. So if we move the fib to 46.30, the minus 272 target, this is a future fib. There we go. And price could dip down, for instance, to the 61.8 at 35. Use that as a bouncing spot and then make a rally to 57 and then to 60, and there will be divergence between these tops, for instance. Now, after the ABC, it depends. We have to take a look at higher time frames. It all depends. I'm not sure if whether this is a 1, 2, 3, 4, 5, or just a simple ABC. Honestly, I don't know. Many still have a downside target available. So if it is an ABC, I would have to see how price responds, really. I don't want to make any judgment or guess on that. It could be an ABC if it is and it hits resistance and it starts to turn, then it could still maybe make a new low. But maybe this is it. Maybe this is just the end of the downside, and who knows? We start a new rally from here. I think that that's really a bit difficult just to say based on this chart. I would probably say let's keep an eye on price in the next weeks and months. All right, we got webinar tonight. Actually, instead of Thursday, just a bit of a heads up here. Advanced methods for trading the markets with trend lines. So that's not on Thursday night like usual, but tonight, a few hours from now, actually 8 hours, 9 minutes from now. So I hope that you can join or watch the webinar recording, which will be available on YouTube through Admiral Markets channel. Tomorrow, and then I have strategy as always, which will be actually my last webinar with the live trading here analysis for April, and I'll be back in May, of course. And then it has how you can capitalize on a trading deposit bonus. All right, that's tomorrow evening. And once again, if you're interested in deposit, of course, grow stronger with the deposit bonus, just go to admiralmarkets.com, click on the blue button here, get your bonus, which will lead you to the next page with more details on what exactly that bonus could be. For instance, there's a slider that would show you that right here, and you can move that around for your info and some other information that you can look at to see if it's something for you. All right. So that's that. Any questions? Otherwise, I think we probably can wrap it up. Thank you so much, Beverly. That's very nice of you. I'm sure that we're going to have a good time, even if the weather seems to be a bit more cloudy the next 2 weeks, but I'm sure the sun will peek around once in a while. At least it's going to be warm. It'll be about 20 degrees, so that's great. Last look at Kiwi, and I think we're going to see, I would like to see a double dip here, and then a bounce. Now, I might be wrong, and who knows, there could be no Kiwi in Aussie strength, but all in all, those are the ones that are trending. So if they do continue, they're set up to best. Will they continue? That's something that time will tell. After the news event on the pound, this pound odd on a 5-minute chart, I think it looks pretty good for downside too. All right. Well, folks, no questions or comments, so I think that's it then. Thank you so much for joining. Hope to see you tonight and tomorrow as well. And thanks for all the comments. Great to hear from you. And wish you good trading. Cheers.